Hello, hi everyone. Today I want to talk about interesting topic, about the top tip for successful investing and trading. So a lot of people ask me the same question over and over again, asking me, Colin, what is the best tips that you give me if I'm a new trader or new investor into the market? What is the advice that you will give me? Okay, so today I'll list out some of the top tips, that I will advise a newbie or someone that want to go into the market to invest or trading. Okay, so first thing first is when like trading is a life skill. So you must understand that trading is not about getting lucky. Trading is not about having their one secret method to trade. Okay, trading is a life skill just like swimming. So there are some basics that you need to drill in and you need to do it over and over again to acquire that life skill. Okay, so yes, you can go to YouTube, you can see we made thousands of different videos teaching you different ways to trade, different way to enter, and different way to exit, different way to calculate sizing and things like that. But at the end of the day, there are some basic methods. So the most important thing, if you can get from this, is number one, if you can afford it, number one is to get a coach. Okay, get a coach. Why do you think it's important to get a coach? Just like when you want to learn swimming, okay, of course you can do it on your own. You can see how people are swimming, then follow their stroke and try to swim, okay? But the fastest and easiest way to learn swimming is actually to get a proper coach. Someone who've done it before and someone who can make sure that you are safe. Okay, so there's some advantage of getting a coach. Number one, if you get a coach, very important is that the coach will keep you safe. Yes or no? Like you're doing swimming, you don't immediately jump into the deepest end. So the coach will same thing. You'll make sure that you keep you safe. Okay, so that you don't drown. Yes or no? So in trading also same thing. You make sure that when you trade, you don't lose everything in your account. Okay, so first one is keep you safe. Second thing, about getting a coach, it saves you time because nowadays it's no longer about more or lack of information. There's so much information, so much content about trading. You go on YouTube and search thousands of videos teaching you how to trade or teaching you how to invest. But a good coach is able to save you time. So to tell you that, hey, Colin, right now you don't need to learn all the 1,000 methods. Focus on these three basic and you will learn how to trade and invest successfully. Okay, that's the second one. And lastly, if they're able to do the first two, keep you safe and save you time, over time, it will get you the results that you want. So that is the first core basic. Trading is a life skill. Get yourself a coach. Fastest way, shortest way, safest way to get started in trading. Second thing, okay, talk about the principle of trading, the principle of investing. Whatever I share with you today is just my way of looking at the market. It may not be the right or wrong way. Okay, so I want to cover this part about trading versus investing. Okay, what is trading? The idea of trading is when you want to trade, you want to get in, you have a target price. You want to aim to get out at a certain price. Okay, that means you enter, you want to aim to get out at a certain price. And you also have what we call a stop loss price. If your hypothesis, if your guess is wrong, how do you exit a position? So these are things that is about trading. Investing is a bit different. Investing, look at the value, look at how much a stock is worth, and then try to buy the stock below the value. They do not really have a stop loss price because the idea is if you buy at an undervalued price and you go lower, you should buy some more logically. Yes or no? Okay, so they don't really have the stop loss price, and they don't really have a target price, a fixed target price. So you have to understand the difference between trading and investing. Okay, so coming back again, when you're investing, what you want to look for when you're investing, you look for undervalue. Okay, you look for things that are undervalued. What do you mean by that? Okay, there's a way to look at the chart to see over time, historically, what is the standard deviation? What is the price of this stock? And try to buy the stock that is undervalued. Today, I don't have the time to go into looking at the charts and things like that, but the whole idea of investing is to buy stocks that are undervalued. Where are the places that right now are undiscovered, people unloved right now, that you want to look for opportunity to buy. Okay, and generally when you're investing, you do not have like a stop loss, because your hypothesis, if it's cheap and it go cheaper, you should buy some more, okay? But that is investing, okay? But usually when investing, number one, you need to be patient, okay? Because it can remain low for a long time, okay? And you need to be patient. Maybe you can do what we call dollar cost averaging. Instead of buying it one time and get timing wrong, why not? You know that roughly around here is a good time to buy. You just keep accumulating at this price over a period of time, maybe a period of 6 months to a year. Dollar cost averaging, you want to invest in this undervalued stock or this undervalued market. Okay, that's investing. Okay, but usually the time frame is longer. After accumulating, you want to sell maybe in 1 year, 2 years, 3 years time. It's not so fast. Okay, when it comes to trading, that's how we talk about trading, right? Trading has a specific entry price, it has a specific exit price and a stop loss price. So the basic concept of trading is like this. Okay, in investing, you look for undervalue, right? But in trading, you do not look for that. You look for what is in favor right now. For example, previously AI was in favor, EV was in favor. You trade what is strong right now, what is in the favor right now. Why is it so? It's because at that moment, there is transaction, there's liquidity, there's volume. You want to get in and you want to get out a certain position. So in my terms, what we call buy the strong sector, buy the strong country, buy the strong stocks, and sell the weak one. Okay, so it's a bit different from what we call investing, because investing is looking basically the weak one, the undervalued one. In trading, you're not doing this. You're looking for what is in trend right now. The trend is your friend. Okay, why is it different? Is because you buy with the intention to sell. So you want to buy something that people are looking at. You do not want to buy something that nobody is looking at, because if you buy it and you want to have the idea of trade, maybe nobody to sell to. Yes or no? So you want to look for strong sectors, strong stocks, strong markets to invest. Okay, that is the principle of trading. Okay, and under trading, there are other principles. Maybe in the future I can talk about it. We must have learn how to calculate the entry price, the stop loss price. You must know how to calculate risk reward. Maybe in the future I will cover more in the future. But today I want to cover the big picture, the macro, so that you have an idea how to get into this trading and investing. Okay. So number 4, what is important? Whether it's trading, whether it's investing, you must have money management. Okay, you must have money management. So what do I mean by money management? Okay, because at the end of the day, it's not about how much money you make, how many percent you make. At the end of the day, you must learn how to protect your capital also. So in trading, there are certain rules. When it comes to trading, how many percentage of risk, percentage of capital that you risking every time. That means you do a trade, you have this idea that this sector or this stock is strong, you buy. How many percent of capital are you risking? Okay, you must have some rule of thumb to understand what is money management. Okay, same thing for investing. You cannot just all eggs in one basket, right? You must have a way of diversifying your portfolio also. So generally, you want to see how can you diversify and make sure that even if your hypothesis of this undervalued investment doesn't rise, there will be other stocks or market may rise. Okay, so you must have a way of diversification also. Okay, so that is number 4. Okay, money management, very important, and when you come into trading and investing. And number 5, okay, a lot of people don't talk about this. Number 5 is knowing yourself. Why we talk about knowing yourself? Because at the end of the day, yes, you want to make money, but you need to know yourself. What is your temperament? Okay, example, you are someone that is very don't like to lose money. That means you want to get in, you want to get out, you want to once make money, you are very happy to get out. Okay, you are not comfortable to lose money. Okay, then in that case, what kind of approach do you do? Okay, you are very fast. Okay, you want to get in and out fast and things like that. There's a character like this. And then there are people that very lazy one. Okay, they don't want to keep looking at the market. They want to be very chill and just do it longer term. Okay, then when you are someone like that, then there's a different approach to the market. So coming back again, if you are someone that cannot sleep, you cannot sleep, then what you can do, you must have a trade plan. Yes or no? You must have ultimately, if I'm wrong, I'll lose 2% of my capital, and then you just trade, and then you have a specific stop loss price. Okay, so that is someone that is want to be very fast, okay, and want to get in and out very fast, and want to know what is my maximum loss I'm willing to lose. So you maybe go into trading, different time frame and things like that. Okay, but someone that is more lazy, right, that want to chill one, don't want to keep staring at the market, but can sleep at night, right? Then maybe you can look at something that is more investment like. Okay, that means you can put it down, and then if it goes down, you're okay with it and continue to invest over long term. You're fine with it. Okay, so you need to know yourself. What is your temperament too? Okay, in terms of your risk, in terms of how much time you want to spend and things like that. So this is important of knowing yourself. So summarize again, okay? So first, get your careful coach, okay? Save you time, save you money, get you results. Number two, know the difference between investing and trading. Investing is looking for undervalue. Dollar cost averaging is one way to look at it. Number three, trading. When you trade, you want to look for what is in trend. Buy strong, sell weak. Number four, you want to look for money management. Protect your capital is always important. Percentage of risk in terms of short term, diversification in terms of longer term, and lastly, knowing yourself. You need to know what kind of methods suit you better. Okay, these are the top tips that I'll share with you. I hope you have gotten something valuable. Thank you.